Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today I want to talk to you about a new court ruling that is going to bring medical debt back to credit reports and how it affects you. We want to make sure it keeps you from experiencing a lower credit score or ruining your goals and your chances of being approved for the bigger things in life that you want to borrow for. So there was a change that had removed smaller medical debt from consumer credit reports. Well, a federal judge in Texas a little earlier this year had basically overturned what the Consumer Financial Protection Bureau's new rule was removing that small medical debt from being reported to your credit report. So before I get into the details of this, I need for you to know that a collection is a collection is a collection. Whether it's a $50 collection or a $50,000 collection, that collection amount doesn't really affect your credit score as much as the fact that you have an outstanding collection and a new collection. So when that collection hits and it's a new collection and it's open and outstanding, that's the thing that hits your credit the most. So overturning this ruling where those smaller medical bills under $500 would not be reported to your credit report is going to be like a punch in the gut. So this is what a Forbes article that I was reading had shared. The CFPB estimated it would have lifted credit scores by an average of 20 points for nearly 15 people. And now with that rule being overturned, unpaid medical debts are going to remain visible to lenders and landlords and employers or whoever looks at your credit as part of their application process. So it undoes or reverses a lot of recent progress. For some, 20 points may not mean a lot, but if you're looking at say a mortgage, that could be a big shift in your interest rate. And it could mean the difference between getting approved and not. So this ruling is significant. So some people in this article were being listed as arguing that removing medical debt from credit reports could harm consumers in other ways. For example, if it's not on your credit report, the debt still exists, and more patients might just stop paying their bills. And if that's the case, then hospitals could raise prices by increasing copays and deductibles and those kinds of things. One industry report estimated that hospitals could lose $24 billion in the first year of this change, which could hurt small and rural hospitals the most. And so they're basically saying that if you remove this medical debt from credit reports, it doesn't give any leverage to the collection agencies, and basically they would not have as much success to recover unpaid bills. But let's just take a step back and look at this from a different perspective. So medical debt is unforeseen and unplanned. So it's very different in my mind from having credit card debt or a mortgage debt or a loan, because those things are voluntary. You applied for it. Medical debt is rarely voluntary. It's because something terrible happened, right? An injury, an illness, some kind of a surprise, the kind of surprise you don't want in your life, or maybe insurance denied a claim. And in that case, it could truly just throw your family into financial distress overnight. We don't choose to get sick. We don't choose to get hurt. And unfortunately, it feels like by overturning this ruling, it's penalizing people because it's not irresponsible spending. It's the care that you need, and sometimes it winds up with a medical debt that you're not prepared or able to pay right now, but perhaps you could pay over time with a payment plan or something like that. So in a time or an era where I feel like many people are just literally surviving with higher costs from food to gas to housing, to throw in cost of medical for these surprise issues that life might throw at us, I don't think that it's a fair measure of credit worthiness to have that on your credit report. And if it is listed, perhaps have it listed where it doesn't affect your score. But for instance, as a mortgage loan officer, if there's an outstanding collection and it's larger than a couple $1,000s, typically I have to take 5% of that outstanding balance and use that as if it were a payment for qualification. So for instance, if you had a $3,000 outstanding credit card debt that was now a collection, I'd have to hold $150 a month against you as if you were required to make that payment just for qualification purposes. Now, the exclusion to that rule is if it's medical, but perhaps that part changes where that might be used as a qualification as opposed to your credit score being affected. In other words, when your credit score goes down and you apply for financing, a new car loan, a new mortgage loan, credit card, and you have a lower credit score, the interest rate that you now get is higher because your score is suffering a little bit. That can impact a family's ability to save or give or tithe or pay off other bills because they've got a higher interest rate on their mortgage or their car loan or a very substantial payment every month. In my opinion, it just feels lousy if that's because of medical debt. So now that medical debts can legally remain on credit reports, experts say that consumers will definitely feel the hit. So unpaid medical debts over $500 can continue to show up on reports, and it can continue to bring down credit scores. So again, to the point of it affects everything. It could affect a mortgage approval, interest rates, and in some cases, even job applications. What happens if you do have a collection outstanding? There are some federal safeguards that are in place to protect you. The Fair Debt Collection Practices Act that prohibits harassment and requires validation of debts. In other words, that creditor has the responsibility of proving to you that you owe that debt. And if they can't, well, then they're falling outside of that scope of this federal act. And if you truly feel like there's a debt that is haunting you and it's not yours, the Fair Credit Reporting Act lets you dispute inaccurate or duplicate debts. So in other words, it should only show up one time, not listed many times for the same debt. So what can you do about this? Please monitor your credit report. Keep an eye on anything that is new or changing on your credit report and dispute it if it is not yours. If you find that you are going to be incurring some medical debt, please reach out to the physician, the hospital, and stay in communication with them. See if you can get on payment plans to keep something from winding up as a collection against your credit. And you can also visit undomedicaldebt.org to see if your community partners offer any kind of relief efforts. As an example, in Arizona, the governor just recently announced $429 million medical debt had been erased for more than 352,000 Arizona residents. And that was from being in partnership with the national nonprofit Undo Medical Debt. So pull your credit reports, dispute any billing errors, and sometimes medical billing errors show up because somebody accidentally input the wrong code when they were submitting it to your insurance company. So stay in conversation with your insurance company too if you are experiencing multiple trips to your physician or the hospital or whatever you might be going through at this time. Work with the billing department to negotiate a lower payment or even a payment plan. And especially if you're on a fixed income, there might be some state protections involved for you. So if you've got some medical bills or you're expecting some coming your way, here's some suggestions. Set up a payment plan. Many of those providers offer low or no interest payment plans that breaks your balance into what I hope would be manageable monthly installments. You can also negotiate those costs directly. Billing errors and inflated charges are very common, especially if you have insurance and your insurance didn't cover it. There's a really good chance that the cost of that service that was reported to the insurance company was higher than if you were to pay for it out of pocket. So a lot of times they can bring down those charges, but I would encourage you to start with requesting an itemized bill, and then you could propose a fair payment. If you don't have health insurance from your employer, there are companies out there that offer individual health insurance plans. I have a few friends in the business. So if that's something you'd like to know more about, they serve many, many states, and I would really feel very comfortable and excited to introduce you to them so that they can provide some offerings that hopefully that health insurance can cover if you face some things in the future. And if you are struggling right now with your debts and collections and making payments, please reach out to a nonprofit credit counselor. They can walk you through your options, they can negotiate on your behalf, and they can help you create a plan. Or if the best plan really is bankruptcy, they'll make sure to help you walk through all of those options together. But please try to avoid those debt consolidation companies. The only ones that win are them. So seek out a nonprofit credit counselor for help. Sometimes there is income-driven hardship programs, especially nonprofit hospitals. They offer that. They might even be required to offer financial assistance based on income. So ask about a hardship or charity care. And then finally, explore nonprofit aid organizations. There are groups like Healthwell Foundation or PAN, P-A-N Foundation, that may be able to help with treatment costs or prescriptions. But whatever you do, don't go into additional debt to take over this debt. I've had some people reach out about a home equity line or a cash out refinance, and I just feel really uneasy about that when there are these other options available with conversations with these different organizations that I've just listed, because heaven forbid you fall behind on one of those loans that is secured by your home, then your home could be at jeopardy, and that's obviously not what I would want to ever propose. And just keep this in mind that medical debt can lead to lawsuits where there's a garnishment of wages or a judgment put against your credit. So just keep that in mind. That's where that communication and conversation with your physician, the hospital, whatever you're working through with the medical debt, those conversations will go so very far. So don't just ghost them. Have a conversation, really lean into finding out what's possible, and then check out the show notes. I'll put some of these notes that I've shared here with you today, and then do your due diligence at researching what's possible for you. Protect yourself. And if you're going through a heavy health thing right now, I'm so sorry. My heart goes out to you. I'm sorry for what you're dealing with, because the last thing you want to deal with is now additional medical debt. Hey, if you have any questions, reach out to me at questions@creditchristie.com. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christie on Instagram.